On this episode of the show, I have with me Susan Liu. She is partner at Uncork Capital, and we're going to be talking about, finding the right companies, backing the right companies that have the right solutions within, especially the AI space. We're going to talk to Susan about her thoughts and how she sees that with early seed stage companies and valuations and adoption, and maybe where 2026 is going to take us a little bit along this AI rocket ship, I guess we can call it. But Susan, I appreciate your time. Thanks for joining the show.
Yeah, thanks for having me.
Absolutely. Okay, before we start, Uncork Capital, tell us a little bit about the what you guys do.
Yeah. So Uncork Capital, we're based in San Francisco and we invest in seed stage companies. We invest all over. So my focus is on the B2B side, but we do B2B, we do consumer, and we do frontier tech. Our check size is, I'd say, like anywhere from like 1 to 5 million. The must have for us is that we're looking for a minimum of 10% ownership in order to get involved, which means we're typically leading or co-leading rounds. And then in addition to our core seed fund, we also have an opportunity fund as well that is used to continue investing in our very best companies.
Absolutely. I guess a question that I always have, and I think when it comes to investing in companies, the earlier you get, it's just really hard. Like there's some difficulties, and I know that there's the power law of VC. I get that. No VC just wants to willy-nilly lose money. I mean, that's just not how it operates. But I do find when a seed stage, especially earlier stage VCs are operating and they're looking for things, it is obviously a little bit more challenging. I guess from your perspective, when we're looking early stage, especially for companies that have that quote unquote right makeup, I mean, are there some things that you've noticed just from pattern matching that you can look for and that has helped in the past?
Yeah, it's a really good question. So I would say in early stage venture, you are going to lose money. I think it's unavoidable. The loss rates at earlier stage are just higher than later stages, and it's just part of the game. And you just have to accept that as an early stage investor. You're right, though. I think there are certain things that you could potentially look for to hopefully minimize the losses. And I think everybody kind of has a different style of investing. For example, even if you look across our partnership, we're kind of looking for different things. So, as for me, there's certain things that I like to see, and I wouldn't say it's true for all of my investments, but I think it's worked out for me so far. So how I typically look at investing, I generally specifically spend time on 3 things. 1 is team, 2 is market, and 3, I kind of call it product / traction. It's a combination. So it's a product wedge / traction, based off of the product that you're selling. So, I can cover all 3. And I'd say investing, especially the early stages, is definitely more art than science. This is kind of the rough formula for me. For every deal I do, it's kind of a different mix of each. I weigh each factor a little bit differently, and you'll never have the same type of investment. But in terms of teams I like, my focus, by the way, is on the B2B side. In particular, I really like investing in AI applications. So I'd say typically for me, the founders that I gravitate towards, they tend to be a little bit more seasoned. They tend to have some, unique insight into certain markets. And usually this is earned insight, meaning they've typically worked in the space before. So for example, I invested in this company, Numeral, that sells sales tax software. And they're also automating the whole sales tax process on your behalf as either a CPG company or as a SaaS company. And what I really liked about the CEO, the founder, is that prior to starting this company, he was actually, a CPG operator. He was building in the past, and sales tax was one of the pain points that he encountered. So he decided to build in the space. Another one of my investments, a company called Ivo, that is building a company around AI contract review. He was an ex-lawyer, so he knew the space pretty well too. So I generally like it when the founder has a background in the market that they're building in. And the reason why I like that is because I'd say generally speaking, they kind of just know the customers. They understand the customers really well. So when it comes to selling to these customers, I would say they're much better at it. So that's something that I really enjoy. Of course, it's not just in addition to knowing the space really well, that, generally teams is more than one person. I have backed solo founders, but usually like, I'd say like most like founding teams are like maybe like 2 to 3 co-founders. I usually I call them like, these are like the industry experts. I like to pair the industry experts with a technical person. So like, I would say like the ideal profile for me is like, somebody who's an industry expert, plus like a technical co-founder who can build the solution. So that's generally what I like to see from teams. Again, doesn't always have to be the case, but I think that's something that I like to see. And then when it comes to markets, I think like a lot of VCs say this, but it's very true. Meaning like I like really big, massive markets. Sometimes it's not as obvious. So if it's not as obvious, like I like to see trends that show that the market is growing. I think that's really important. And I know a lot of VCs talk about this, so I won't spend too much time here, but like big markets, if not big right now, hopefully one where like there's trends towards becoming a bigger market over time. And I think AI has like a really unique impact here because, AI is eating up some of the labor budget because it's doing some of the work of humans. And therefore, like, I think in many markets, like they are growing because, now potentially like they might be able to do some of the work that historically a human could do. And of course, like it's not, AI is still limited, in many senses. And so oftentimes you will still need a human, but oftentimes they can, potentially, take on some of the more like mindless work, basically the stuff that like humans don't want to do because it's super tedious. So that's on the market front. And I'd say like generally speaking, because I also do a lot of vertical software, and sometimes like one of the questions that pop up for vertical software is like, when is the market too small? So after doing a bunch of analysis on this, I think like the key for me is if you do a market size, assessment, if we think like the potential market is bigger than 300 million, it's probably big enough. But of course, again, like I'm looking for growth within these markets as well. And then as for the last part, product wedge and traction, not all companies will have the traction component. But on the product wedge side, generally what I like to see here is just like a super, super strong product wedge. And generally how I validate this is I'll talk to potential customers. So like people I know in my network that could be potential buyers of this product. And I'll ask them like, hey, like this is the product wedge. What do you think? And if they say like, I love it, I have to have it right now, then that's a really good sign. That's generally look for when I am evaluating companies. But if they say something like, oh yeah, that's nice, it's cool, but like, I don't know if it's something that I have to have now, then that's probably a no for me. Because I like to see really strong, product wedges where like it feels like it's a must have, for the end buyer where they almost feel like they can't do the job without it. So I think that, that signals to me that like the product wedge is very strong. And then of course on the traction front, so I would say like some seed stage startups have this, others don't. Of course, like if you're earlier in your journey, you're not going to have any product, traction. But I will say that like for a lot of like, AI apps that I look at, there is some product traction, and of course, like usually you want to see this like growing as quickly as possible. I think we all know that the Series A milestones have changed where in order to get a Series A done, like the threshold is much higher. Whereas in the past, like you just need to get to 1 million in terms of ARR to get to at least attempt a Series A. I'd say like now it's like you probably have to get to like maybe like 3 to 5 million ARR in a year in order to get a Series A done. So, I do see companies with some, traction, some revenue traction, at the seed stage. And, if I do see that, I like to see higher growth, ideally.
Yeah, I guess a question when it comes to this, the AI space. We are now seeing 20, 30 of the same companies. I've seen on the pod from just companies I come across. I'm like, oh, I've seen this business model. Oh, I've seen this. And it's okay. I guess if we were to rewind the clock back 10, 15, 20 years ago, you saw less collision, I feel. Maybe I'm wrong. Maybe I'm just not recalling it. But I feel there's a lot more collision. I guess as a VC, someone who invests, especially like in these enterprise type products in the AI space, do you worry that there could be too many of a similar product? Or is it still a case of, I got to invest in the company or the model or product that I believe in?
Yeah. I think it's not abnormal, meaning like I invest in AI applications, right? In the old world, right? Like pre-AI, this was called SaaS. And like, if you look at SaaS companies in the past, like anytime there's an interesting market, like for example, let's take like marketing software. Yeah. MarTech. MarTech was all the rage, like, I don't know, like 5 to 10 years ago. And we literally saw like a million companies. Like if you look at like the old MarTech market maps, like hundreds of companies like tackling this market because it's massive. And again, the trends are right, where like I think people are making the move from on-prem to cloud, and there's just a lot of opportunity. A lot of like smart founders saw that opportunity and they wanted to build. So I'd say like it's not new in the sense that like, for any good market, there's always a ton of competition because, the reward is so great on the other end. But it does make investing trickier because like you want to make sure you're backing the right horse, right? And I think as a VC, the goal is always to back the player that will be number one or like number two, or maybe like worst case number three. Generally, like how I've seen these markets evolved is the following. Usually like I would say like almost all the rewards go to number 1, 2, or 3. Number 1 will probably go public. Number 2 may be able to go public, but more likely it's M&A. And that's true for probably number 3 as well. And then like everybody else kind of like just doesn't work out for better or worse. That's kind of how I've seen these markets evolve. And it's basically what I expect for a lot of these like new AI markets as well. Which is why like we're also seeing king making happening in the VC world, where a lot of later stage investors are piling into like the number 1 or number 2 player. And why you're seeing like all these funding rounds like happen back to back, meaning like somebody will raise a Series A, and then like 3 or 6 months later, like you'll see that they raise a Series B. They probably have had some like good progress in terms of company building, but probably not a ton. But like VCs kind of understand this dynamic, and they want to make sure they're the number 1 player before like, the rounds get too expensive. So, I mean, like this stuff is definitely happening. And again, like with AI, like we've never seen growth like happen this quickly before. And so like, the time for a company to get to 100 million in terms of ARR is much faster nowadays than in the past, like in the old, I guess I would say like relative like to the old SaaS world. So, for me personally, like I like markets where there's a lot of competition because that it's, well, I guess you never know for sure, but you have a hunch that it's probably a really good market where AI is having like a massive impact. An example of this is law, right? You kind of know like in legal tech, like, something's happening there because there's just like a lot of companies, a lot of funding, a lot of interesting companies being built. But I would say like, the key for founders is just make sure you ideally you become number 1 or number 2. And then if not that, you just kind of have to have a really good story about like why you should exist in this market.
I like that a lot. And I guess a question, when you're looking at, we've been talking about SaaS, you're talking to MarTech. At some point, I guess, when we're looking at these products and we're looking at the market, we're early. Is there a thought that potentially investing where there's less dollars going we hear that a lot, investing just in the stock market. And the reason I'm asking is we're seeing the herd rush into AI. All the dollars are going into AI. Obviously, we're hoping the bet's going to come true. It looks like it should. There's a lot of positives. But is there a risk of not looking at other areas? Or is it a case in the VC world where it's, listen, this is where the dollars are going because the competition for the next thing is too great to miss out on it. I don't want to call it FOMO, but maybe there's a touch of you can't miss that big swing.
Are you talking about like companies are like investing in companies that are not AI focused?
Yeah, investing in companies that are not AI focused, maybe a slightly different focus, or maybe.
Yeah, I'll take this 2 ways. So one is, look, I think as seed stage investors, we aim to be ahead of the trend. Yes, like if I'm backing a company and it's already a hot market. Well, I guess I still invest in some like markets that are already hot, but like my goal, at least as an early stage investor, is to get into that market before it's hot. So like, for example, when I invested in Numeral, which you just talked about, which is a sales tax company, like sales tax was not hot at all. People were like, this is such a boring sector of the market. Like, why would you like invest in a company here? But then I did my work and I was like, oh my gosh, like this is like a multi-billion-dollar market. And all the players are like essentially legacy players where they've been around for like a really long time, like Avalara, Vertex, etc. These are old companies. I think there's room for a next generation player here. So that's why I ended up making a bet in the space. But it was definitely not a sexy market when I invested. It's a sexy market now because people realize the opportunity. But the goal for me is always to get in before like the market gets super sexy. And then, as it relates to like the AI component, like investing in markets that are like not AI driven, I definitely think there's still opportunity in non-AI markets. Like, for example, like I do a lot of vertical software investing, and like a lot of, I'd say like AI is present in some vertical markets, but there's still markets where like AI is still not a thing because like, maybe they're just starting to adopt technology. Like there's still markets where like, it's mostly like pen and paper and there's just no like software yet. And that happens. Or maybe like they're still moving from on-prem to cloud solutions. Like, it's not like, sure, you can add AI to it, but like it could just be as simple as like going to the cloud, right? And so I'd say like for me, like if I were to explore an investment that was non-AI focused, it would be in vertical markets, most likely. And I would be looking for systems of record, core systems of record. Like that's what, like, essentially some sort of software platform where it's how you run your business. And like, it's like the main place you go to like run your business. Like that's what I would be looking for.
Absolutely.
And I definitely think there's an opportunity there. It's just finding the right markets. Yeah.
Yeah. I guess that's, we've been kind of talking about finding that right market, obviously. Mm-hmm. Lots of move into AI. I guess when the one component of this is there's a lot of product being built. We also see a lot of studies coming out. I think the MIT one was one about the percentage of failures from companies themselves implementing solutions. And obviously a lot of companies are piloting these AI solutions that are popping up. When it comes to adoption, when it comes to usage, I mean, we're going to have to see some traction on the enterprise side to, I guess, justify the spend at some point. When you start looking at that, and you start looking at ROI, have you started seeing anything that starts looking like real, like litmus tests of what people are looking for to get out of an AI model, so they know, hey, this is worth the X spend we're spending? Yeah,
I think your question is around like just like how I think about ROI for like AI spend, right? Yeah. So, I mean, like, I think you kind of nailed it, which is like, I think a lot of companies that are purchasing AI solutions are looking for the ROI component. I think that's really important. Like, look, AI is sexy, like there's all this promise, but like not all AI products can deliver, meaning like have meaningful impact on your business. And I say generally like businesses are looking for probably like two things. One is to either drive more revenue or like save costs somewhere. Yeah. If you cannot prove one of these two, I think like it's going to be a tough sell and like companies are not going to renew. There is a lot of, we all kind of know this. There's a lot of experimentation happening right now where like your CEO will probably be like, hey, like we need some more AI in our company, right? And then like you as like maybe the business leader will have to go and like figure this out. And you're probably trying a bunch of things. And I think that's okay. Like, I think it's good that people experiment. But if you're selling to these companies, like you have to make sure the ROI is super clear as either like a revenue driver or like really prove out the cost savings. And like help your customers be like measure this, because like that's basically how they're going to figure out whether or not they're going to renew with you or not. My guess is that in the next year or so, we're just going to see a lot of churn because I think a lot of companies, again, like a lot of companies have been experimenting over the last year. But again, like not every solution is proving out the ROI. And if they're not, they're just going to cut budget for this. Like it's just part of the game.
Absolutely. I guess as you're kind of looking forward, we're still early. We've now been within the AI space for a couple of years, all the attention it's gotten. I guess, do you expect more of the same? So is 2026 going to just be a continuation of 2025? I know we dubbed one year the year of the POC. I mean, what are your thoughts on 2026 moving forward?
Yeah. I would say I'm trying to decide like which stance I want to take, but I'd say like I'm cautiously optimistic in the sense that like I think AI can still have a massive impact. I mean, like we're kind of just scratching the surface in terms of what AI can do and like its impact on many markets. And the thing that like makes me excited is that like I am seeing AI have a pretty massive impact in multiple markets like legal, which we talked about. Like the ROI there is super clear. Healthcare is another space where like, boy, like there's so much like manual work happening in those markets that I'm glad AI is automating a bunch of it, because like some of it just seems a little unnecessary at the moment in terms of like manual work / human labor that's kind of going into like certain like healthcare processes. But at the same time, like again, like we kind of talked about like people being very experimental and trying a lot of solutions. Like I just, I do feel like the churn's coming at some point, and I think this might be the year where like we're finally going to see a lot of churn for some companies. It's not all like, at the end of the day, it's not just all revenue growth. Like you have to think about retention. And I think, some early AI companies are just not focusing on that enough. And when it happens, when the churn comes, it's going to be a rude awakening. Ideally, it doesn't happen to our AI companies, but like it's definitely going to happen. We're just going to see that. And then like as a company, you're just going to have to start thinking a little bit more about like, hey, like how essential is our solution? And then like you kind of go back to like first principles, which is like, make sure you have a good customer success department that can like, flag, companies that might churn, and then, work on those accounts to make sure they don't churn, et cetera. So, I do think like AI is going to continue to have a really big impact, but we are going to start seeing like some churn happen with some AI companies, which will be interesting.
Absolutely. I guess, just maybe a question from that. When you're looking at, I guess we talked a little bit about we haven't talked about valuations, but when we're looking at valuations, I mean, AI itself fundamentally is bringing about some kind of potential efficiency for many of the discussions we're seeing, right? I mean, that could mean somebody has more time, you need less people. I mean, there's a lot of different, there's a few different things we've heard, but when it comes to revenue, outcome-based is apparently becoming a thing where it's like, hey, I'm saving you X%. That's I want to charge based on that. Is that starting, or has that caused the VC world to start looking at valuations different, or is it still we're just not there to actually get that far ahead of it?
Yeah, I say we're not there yet, meaning like I actually don't know of that many companies that are charging based off of outcomes just yet. I think like there's been a lot of talk about it because it would be a very interesting business model, but we're not quite there yet, I would say. Yeah, I mean, like, look, when it comes to like valuations for AI companies, it is off the charts. And the reason why, and it's kind of justified to be off the charts, if I'm being honest with you. Like, I've never seen valuations this high ever since I've been a VC, and I've been doing this for 13 years. And I think the reason why it's justified is because, these companies are growing so much faster than I've ever seen before. And of course, like revenue growth is a big factor in terms of what like valuation should be. In addition to that, it's not just software spend anymore. Like it could also be labor spend, services spend, et cetera. So you're eating into other budgets. And so now again, markets are much larger. So, does it justify a higher valuation? I'd argue yes. Which should you invest no matter the valuation? Probably no. Like it does take a little bit more analysis there to kind of figure out like the right price and like, what the potential cap of that should be. But I think every like VC has kind of like their own internal goals in terms of like, how much they want to return for the fund and all that stuff. But yeah, like just given all that, I feel like yes, valuations are high, but there's certain markets where it justifies it.
Absolutely. Do you think that when I'm definitely, we're way too early for outcome-based anything at this point, but when you start looking at the companies that you are investing in this, in the enterprise AI space, are there things that you're seeing in terms of successful, I guess, people who've moved from seed stage to the next round of funding? Are you seeing some common things from an AI strategy perspective? And the reason I ask is it's fundamentally a different product. You mentioned MarTech. We're not delivering a CRM or something that's going to help that CRM process. We're delivering some potential black box secret sauce we're telling people is going to make their world better. I guess some people are going to position that better than others. But are you seeing successful founders? Is there something they do better with that, or is it just purely product delivery because it's either going to work or not based on a customer.
Yeah. I would say like, while the end product is different, meaning like it's not just software anymore. It's, it could be an agent, a co-pilot, whatever. I'd say like the fundamental, I would say the fundamentals of a business when it comes to like raising a Series A is still roughly the same, but like the bar is just higher. I mean, we kind of just like touched on this, like in terms of like where you have to be, like ARR wise has gone up from like 1 to like maybe 3 to 5 million in terms of ARR. Because again, like companies are just growing so much faster. But at the end of the day, I think like Series A investors are still looking at like the same things. Yeah. Meaning like you still have to solve a real valuable product or problem. I'm sorry. Where, maybe like the product is different where like it's not just like a CRM anymore. Now it's like an agent, but the agent still has to deliver value. I think that's really important. You're still backing a great founding team, meaning like you kind of have to believe like they can take it all the way and like take the company public. Like that's still the same. Still has to be a massive market. But again, knowing that the markets could be potentially bigger now. And then, I think you always have to factor in like what else is going on in the ecosystem. Like you want to make sure you're backing like a top player in that space with a unique angle. And like it's up to the founder to like really sell that story. So I'd say like, at its core, like the Series A components are still roughly the same. The bar is just higher. I mean, look, it's really hard to get a Series A done these days just because like there's a lot of really interesting AI companies that are just growing quickly. But if you like, again, like if it's a good company, like they should have no problem raising that Series A.
Interesting.
And I'd say like Series A investors are also very keen to have more like AI in their portfolio. So, I think it's definitely still possible. It's just, again, the bar is higher than ever before.
Yes, and actually, yeah, that's actually a really good point because as you were kind of talking through that, I was like, it might actually benefit investors to go heavier seed stage in some cases because there is a lot of unknown, and if you want to invest in more unknown and more opportunity, obviously getting earlier is where you go. But to the flip side, you have to prove out your business, your product, and the product in this case is it's not as easy to touch and feel. It's got to be kind of proven out at a different level. And then you get your Series A. So as you're talking, I was like, I could see the bar being different. It's not like, these features are coming. Is it actually really work? Can it solve this problem you've claimed it stated? And that's a whole different maybe bar than before.
Yeah. I think that's right. And look, at the end of the day, like Series A investors still kind of evaluate companies the same way, which is like, how do you figure out if there's real ROI / the product is valuable? You talk to customers. Like that still happens. Even when I prep my founders for their next raise, like a Series A, for example, I'm like, hey, like make sure you have 3 to 5 companies, or 3 to 5 really happy customers that are willing to speak on your behalf that will tell your VC like why you love them and why you're a great company and why you're even spending the money you're spending on this company. I think like having the customer tell the VC is like the most powerful thing you could do when it comes to raising your Series A.
Absolutely. Love it. Susan, thank you for taking the time. Thank you for sharing with us. If somebody does have a follow-up question, you covered a lot of different areas for us, but is there a good way of touching base with you?
Yeah, you can find me on LinkedIn. And then if a founder wants to send us a pitch, our email's pitches@uncorkcapital.com.
All right, perfect. Then again, Susan, thank you for the time. I appreciate it.
Thank you.
Absolutely. All right, that's it for the episode. We'll be back again, different guest, different topic. Until then, 2 things. I'd love it if you could share this episode with somebody else who could find value in it. I think Susan covered a lot for us within the startup space, investing in the startup space, especially seed stage. She actually dove in and told us what she looks for, some of what are the key components to a successful startup really haven't changed, but there are some wrinkles that are even a little bit more challenging in this AI space. So share this with someone who is a founder, wants to be a founder. If you want to pitch, we got a link for you that Susan provided. Also, like, subscribe, comment. Let me know how the show is going for you. Until next time, thank you and goodbye.